we gotta, be a little bit, we're gonna have to be a little bit cognizant of. Let's take a look at the earnings plays. There is more than enough plays. I will say this, it seems like the last few days, all the action has been in the all the action has really been in like the first maybe hour and a half, not even. It seems like you're getting like one good hour of shreds, and then it's been a little bit weak. So we'll have to be a little bit careful today. We're getting faded off, right? Like we just kind of came back and filled the gap and ran into resistance. Now, like what goes on, like nobody really knows, right? Like, so now we're like coming back into this range. And so the key is going to be like, if we go red to green, like right away, then, we'll probably kind of continue on with whatever we were doing before. But otherwise, we're just going to have to be, I would just say we'll have to be mindful of what is going down. Let's take a look at the earnings plays first, because I think, when you get a little bit of fluctuation in the overall market, you want to stick with stocks that have PRs and stuff, not like small cap PRs, but like, regular companies that have earnings out. There's nothing going on in that, at that end of things. You see like this FLGC. So like, see, like when you get a stock that gaps up like this, like 9%, that's not really like after it just dumps down like $8, that's most likely like what we'd call like a sucker's bounce, right? Where you're starting to see like a little bit of a dead cat bounce, but it may not actually mean anything. So yeah, I would probably take that off the list. And the reason is that this is like pretty much a full-blown kind of reversal candle. Like you may even pop up a little bit today, but like when you see like that kind of inverted candle, they never really work. Like then every single bounce just gets fucking faded off. And then, you're left like, oh, why are like, my bounce is not working? That's going to be no good grub. This is a turd. Junk. Yeah, you're starting to see a little spike in UVXY, but you know what? Like volatility products haven't been tradable in, quite some time. Like if you ever see, like they get basically 2-day pops, right? And then they just die. Junk. See, like the only things that are popping up right now are volatility products. So that's always a telltale sign. So like, even though you only see the NASDAQ down like 0.5% and the SPY down very little, when you go through and when you don't see, right, any stocks that have any real pre-market movement beyond fucking Bonton over here, then that's not going to be anything that's like too hot. So we've got to just be super mindful, where the market's going. Now, if you look at the overall market breadth of the market, let's take a look and see, like, if we're looking here, like, okay, so percentage of stocks over its 200-day moving average, only 50%, right? In reality, like you want to see this in like the 60s, 70s. Frankly, you want to see, percentage of stocks even above your 50-day moving average, which would be a lot closer into the 60s. So this is like, still very, very weak market breadth. If you look at the number of breakouts yesterday, even though the market actually rebounded and went green, there was only 4% moves, and then 116 the day before. So you can see this has been declining. So what that's telling you is like the strength of market moves, right? Like when people look at like the strength of the market, a lot of times they look at advance versus decline, and that doesn't really give you any underlying strength, because like you could be up 1 penny and it would show up as an advancer. What we're looking for, because we're momentum traders, is right, like powerful moves. Anything over 4% is a powerful move. So when you have this, like you want to see really these in the 200s, 300s, 400s. So what we're starting to see here is, right, there was an increase in breakdowns yesterday. So even though the market actually rebounded yesterday, look at how many stocks actually were breaking down. So what it's telling you is that the indexes were really masking, what was going on. So that's why, like yesterday, for example, like sometimes we were taking our profits a little bit quicker than we wanted to. Part of that is because, you're not going to get the follow through when this number is at like 60, 70, and that's 4%. Well, then what are the odds? Like if you're in a trade, it's going to pop 4% from where you buy it. Very little, right? So you need to be selling at 2%, 1%, 3%, so on and so forth. So as you guys start to get these kind of things start to go, this is just something to, really keep mindful of. You guys should be looking at, your market breadth like every day. And you should be fiddling around with some of this stuff and kind of adapting it to what you like to do also. But it does come in handy because even if you're just day trading, it's more important for swing trading. But even if you're day trading, it's going to give you an acute understanding of how to actually go out and like handle your trades, right? Like, how am I supposed to go out and handle my trades? How am I supposed to know when to sell, how to sell, so on and so forth. So that's going to be very, very important for you guys to spend some time studying that. It's something we talk about every day, but it is very important. Let's take a look at SMFR. Jump. See, the problem with something like this is a big breakdown, right? But like, it just doesn't have any liquidity. When you're trading, like you want to be really adapting your trading to a style where you can, move like, right, thousands and thousands of shares versus hundreds and hundreds of shares. Even if you're not at that point in your career, you want to always, right, be building a scalable solution to your trading. CLSK, John, this is an acquisition, by the way. Zev had earnings out. This was just a one-day pump and dump. MVST is a big giant turd. This was also just a quick pump. China, okay, China. I told the people of China. Now, this is like a big bear flag still. I think that's now 7%. I still think it keeps shorting, these Chinese stocks on pops. They're starting to lose. They grind a lot because they've lost a little bit here. But like you can see, they'll trend. They've lost a little bit of that, a little bit of that steam. It seems like a lot of it is like moving on just gaps. So that'll be something to be mindful of. I think, the easy short on these is probably over right now because they're just they've lost a lot of their intraday range. You can see like the ATR is at 5, but if you really, it's just not giving you that much besides, they're not giving you much beyond the gaps, right? Because they're trading overseas. So that'll be something to kind of keep an eye on, but I don't think that's going to be probably the basis of what we need to do. Now, I will say this future has a big breakdown here on the daily chart, and that is actually giving some good intraday range at the open. This thing popped down like fucking $10, right at the open. That I would actually keep on the list. This one's still like, see, it's an $80 stock, but you got an $8 ATR on it. So like Baidu's $150, but it's only $5 ATR. This is right an $8 ATR at 80, so it's about a 10% of its price. That's actually really good. That means you can really trade this thing back, back and forth a little bit. So I would watch this thing. You can't chase it down 7%. But as soon as this thing pops, like it probably will get a little bit of a pop in the market at the open. As soon as this thing pops, think like 87, 88, we could probably refade this. Like I'd add that to the list for now. PBR, jump. Hey, Roblox had earnings out too, and you are at a key level here. Let's keep an eye. If you look at the hourly chart here, if you start to lose like maybe 73, we'll probably get a little bit of a short on it. This stock does trade a little bit tricky, even though it does a lot of volume. It's got a spread on it sometimes, and it does thin out. Like we've seen that on days that even it trades like 15, 20 million shares. The spread will just widen at like real interesting times, not real interesting times, real inopportune times. And sometimes like, you'll be trading like 2,000-3,000 shares of this thing. And it's like the spread widens to 50 cents. And you're like, well, I just blew all my risk parameters, assuming that, right, the fucking spread was 10 cents, like when I got it. So I put an alert around here. It may just drop off fast too. The one thing is, and we saw this yesterday with our shorts in like BNTX and mRNA, we had really, really good range. When you can coincide, right, like your shorts with the market dumping at the same time, it works a lot easier, right? Like, there was so much range on this. I mean, 50 fucking points is a huge amount of range. You see, like when we were shorting these, if you notice, like the dump also coincided with, right, like how actually the market was reacting. And then the short was over right by 11 because the market itself started to bounce. And so when you're trying to time these like ORBs and stuff, Roblox has, earnings out, but in general, like you'll have to be a little bit careful because if the market starts to just fucking squeeze, then, some of these things start to act a little bit different. So, you want to lay off the short. It's easy to trade when the market is just kind of grinding higher and going up its moving averages, especially like if you trade, mid caps and small caps, but like see what, because we're in a range here on this, and then right, the QQQs are showing so much sell pressure and the market breadth itself is really bad. What's happening is you have to pay a lot more attention to indexes, sector rotation, position sizing, these type of things that normally would not matter as much. They always matter, but they don't matter as much when you're just kind of trending higher. But because that IWM has been, in that range for so long, this year has been a lot more tricky for some traders because you actually have to pay attention to different things in the market that you didn't have to do in 2020, where everything was just going right berserko. And that's just always the caveat of the market. There's easy markets and then there's not easy markets. In general, like your P&L should not fluctuate that much, whether the market is easy or not. It's just the style of trading that you're doing starts to change. BHP, see, this is also a bleeder. TME, IQ, these are all Chinese stocks. It's hard to chase these things down, so much though. So we'll have to kind of, I think we probably, lay off those for now, unless we just saw a big, squeeze. Now this BNTX, I think this, look, if it loses this 320, I know it's down a lot, right? But don't assume that just because something's down a lot that it can't keep bleeding up. When you get something that's gone parabolic, like this thing was up 250, 300%, right? And it's really up, right, 1,000% in the last 12 months. They can keep bleeding up. So keep an eye at yesterday's lows. We had some really good shreds on this in mRNA the last few days, but we can keep beating it down. If this thing loses 320, and we start the ORB right around that level, right? Opening range breakdown. I think we could still keep taking this thing for a hot second. We're not necessarily going to be able to rip and ride this for too many more days. But I think, coming back down into 250s and something will actually give us probably a really nice bounce. I think one more big down day, probably we can get ready to bounce this, but I think we can keep shorting this for a little bit. So yesterday's lows on mRNA also is like 350, right? And they drop fast. Like you see right now, it's down 12 points. You don't think it can drop any more. There's a 50-point range, right? If you really look at the ATR on BNTX, that's an ATR. So when we're talking about ATR, average true range, well, fucking $50 is really something, isn't it? Like that means you can be trading 100 shares of this thing, back and forth and shred. If you want to do a little 200, you're really going to shred. Now, you always have to kind of watch your sizing on this. I usually just do 250, 300, unless it's really juicy. Then, I might roll in with much bigger size. But for the most part, 500 is probably your max on what you want to do with this. I don't think you really need more, but you got a lot of ATR on these bad boys. AMD, yeah, let's take a look. So when the market is getting nasty like this, we want to just stick with really liquid names. Like I would leave like all the kind of NTLAs and right, like BTBTs and these kind of things off the window. And yeah, you're right. Like AMD's got a level here. Like if we lose this, maybe we get a quick short down into like 104, 103. Maybe a couple bucks here. You can see this kind of mega penis candle sticking out of it. If we need a short, we can use that. Like if we need bounces, we can also play these back and forth. But what we do need to do is just be like in the most liquid of names. I would not really even be thinking about I wouldn't really be thinking about like anything too specialty right now, and definitely no small caps because we're starting to see a lot of chinks in the armor the last couple days. So we'll just keep it easy. You know, AMD, we got our D dog. I mean, I would leave FLGC totally alone. We've got some Chinas, but only on pops. Future is the best out of the breed. And then, like, if we need a bounce, you know, I think this SQ is really kind of getting ready for a bounce soon, like one more push down. You know, if we start to fill the gap, I think this one gives us a nice, easy location because you're getting about a 14 on the stochastics. Usually a 14 spot, anything under 20 is considered oversold. But once you're into like, you know, under 20, getting closer to 10, which the gap down might do, you're really talking about, I mean, you're really talking about like an easy kind of bounce if the market is willing to. So just something to be mindful of as you're kind of going through. But I think this will be a nice bounce. And, you know, we can play, I think, AMD back and forth both ways. I know that UPST has been having a lot of range. If you see yesterday, that was kind of with this tail here, that was a little bit of a reversal candle. I have a feeling that we can short this thing if we need to. Put a alert right at yesterday's lows. And you can see this is kind of doing a slow rollover. If this thing bounces under 190, I mean, I think we could take this thing down like really, really quickly. I mean, it may drop even like $6, $7, $10 and just do a mega penis candle like straight down through, and we'll get a good little shred. Now, it's already down 10 points at the open, right? A momentum stock, a stock that has like a big earnings beat. And this is, by the way, probably the best chart in the market. So, right, this is a short-term play. But when you have like a huge heat momentum stock, right, that surges to all-time highs, big volume, right? It's a low flow. They had an earnings beat of like, you know, they had like 1,000% earnings growth. You can't chase these kind of things down. So what we would need to see is like, right, a pop and then a little bit of a fizzle. So you can't chase it down and let it pop up. And then if the market gets weak, we'll slowly kind of fizzle that thing down. We may even have to scale in like a half and half just due to the extra range on it. You can see the ATR on this is $15. Guys, if you have an ATR of $15 or $50 at BNTX, you usually, unless you just have the picture perfect entry, you usually need to go in like a half size and then maybe add a little bit to it as it starts to confirm. If you're a really good trader and you just have really good entries, then that's not the case, right? You don't want to screw up a perfect entry with scaling in. But like if you ever get caught on some of these wide-ranging stocks and you're always like, fuck, I bought that too high, or fuck, I shorted that too low, then it's easier to scale in like 100 at a time if you have a bigger idea. So that's, that's more of a personal evaluation of how you trade, right? Like if I'm trading really well and I've been getting really good entries, then okay, I don't need to scale in because I would screw up my average. I'm going to wait for the perfect entry. But if you're finding yourself like you ever chase too much or like chase up or down, then scaling into some of these plays, if you have a bigger picture idea, is really the only way to go because your entries stink anyways, and you're obviously getting a lot of FOMO. And so the easiest way to handle that is to just, right, slowly piece in like 100 at a time and you're good to go. Let's just stick with the big names today. I would stay away from all turdzillas. I think like your cans and stuff like that are probably pointless at this point. We don't even need to be, I don't think we even need to be, part of any of that. This is going to be tricky beans today, but I think we're going to have ourselves a nice little fun party. Stick with liquid, big range, high ATR, and then watch your size. I think, we could just, we could scalp around with BNTX and MRA anyways and make a good day. But like we've got some juicy ones here, especially if that UPST loses that 190, man, we're going to be able to come in hot on that. Fernando, what's going on? Good. Let's do what we do. Yesterday, remember, we had about 1.5 hours of glory, and then it was done. So we want to be really kind of mindful of all that. Let's go have some fun today. Let's do what we do, which is the do. Mr. Coors. Man, I'm starting to actually think your name is Matt Coors. Good. All right, I'll be in the chat room all day. Well, no. We'll be in the Discord. I'll be in the chat room until noon, hopefully. Because if I'm there all day, it means